Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the forexpeacearmy.com. Today the 4th of August and we'll continue to talk about the euro currency. Well, as usual we'll start from the daily time frame. As you remember, our particular interest links to that price action that's happened during the recent month. It has started from this ABC pattern, ABC bottom, and market accelerates right to the 100% extension target and then turn to the retracement with the start of this nice bearish engulfing pattern. Well, from the point of view of that pattern, market has nice chances to the continuation to the upside further, maybe even to the 1618 extension, 147.08 or maybe 127. I do not have on this chart, but instead somewhere around that area. Okay. Anyway, market has some chances to the acceleration because look at this nasty strong bar right to the extensions target, right to that point. Market accelerates directly from the 618 target to the 100% extended target. So, and very often in that price action, market shows continuation further to the some extension leg 127 or 1618 after some retracement. And usually this retracement shows 618 to the 618 resistance from the to the 618 support from the recent swing up. So that area or that area. And current reversal to the upside, you can see nice thrusting bar yesterday. We could treat it twofold. From the one point of view, this could be the start of continuation to the upside further. From the other point of view, this could be the BC leg from that move. Okay, and market could show some new move to the downside to the 148 area of support. How to treat that area, to treat this behavior is the question. Well, yesterday we said that this is a strong area of support. This was the confidence support, weekly pivot support 1, monthly pivot, and market has penetrated that area just to the for accomplishment of the intraday target. That happens very often if you read our chapter that dedicated to the Fibonacci extensions on the forexpeacearmy.com on the Forex Military School. You know that there we have shown some examples of that where the sum target stands just below the strong area of support. Market very often penetrates this area just to accomplish that target and then returns right back to, so making some clearing of these levels and hitting that extended target and then returns back. So currently market has reached our area that we have discussed yesterday. This is pivot point and 618 resistance from that swing down. You can see that trend still holds bearish on the daily time frame. So now we have to estimate it, what we could do and what to watch for during today's trading session to make the right decision about the possible further move on the market. On the 4-hour chart, we can see some kind of parallel channel, some a bit broadening channel, but somebody of you maybe could draw this line with these lows, and this will be the parallel channel. This is not a very big deal about that. Well, you can see that 4-hour trend is bullish now. Now, this the pattern that I have talked about on the daily time frame. Right, this pattern market has accomplished. That's why it has penetrated the strong area of support. This A, B, C top accomplished the T point and turns to the retracement, hitting our extended target of this potential retracement to the upside. This is the weekly pivot point 143.58 and 143.68, the 618 resistance from the whole swing to the downside. Although we start to treat this pattern as the head and shoulders, now you can see that this is not the head and shoulders patterns because this is absolutely disharmonic pattern in terms of the swings of the head, of the shoulders, and swings of the time that has been spent on the forming of the shoulders. So this is not the head and shoulders pattern, and I treat it more like the ABCD. From that perspective, from that ABCD pattern, we see that market could continue to the downside further, because as we have said yesterday, look at this, AB leg is much flatter than CD. Here we also see some acceleration right to the T point, and from that perspective, market could show deeper move to the downside. From that point of view, this is only the retracement to the upside, and we can expect some move to the continuation to the downside. The one thing that worries me with that retracement is the strength of this move to the upside. It's not very typical for the retracements. Okay, but in general, if you take a look at the whole price action in that area, you can see the nasty thrust bar to the upside, plunge to the downside, again explosive to the upside. Now market turns to some. Well, that's why to clearly tell what we could expect currently is very difficult. Well, on the hourly time frame, we see that market hits in that area stands a lot of different resistances. First of all, as we said, weekly pivot point, also the 618 resistance from the wholesale to the downside. Also, this is 1618 extension from that retracement, from this high to that low. 1618 extension stands right at that area. Also, 127 extension from that high to that low also stands in that area. So you can see that market has met really strong area of resistance and turned to the downside from that area. So if you yesterday entered long, as we expected that market could show retracement, I think you have done well. If you entered short in the expectation of the continuation move to the downside, well, probably you have now the profitable positions, but be careful, because this strong move to the upside is not very common for such kind of price action. This could be the continuation to the upside, and I suppose that the major risk for the bears is that market could continue move to the upside further due to this really strong move. This could be A, B, C bottom, nearest target 143.90. This is 618 extension from that ABCD pattern. Another smaller ABCD, you can see here, A, B, C bottom, 618 stands 143.69. Both of these targets stands above the 618 resistance, above the weekly pivot point, and above the previous highs around 143.55. So if market will hit that area, I suppose that some stops that has been placed there will be triggered. So if you entered short and somewhere from that area, I suppose it's time to move your stops to the break even, because this is really nice pullback from the upside, from the area of support, 3 to support from that swing. Okay, so it could lead to some continuation to the upside. And if you will look at this move on the 4-hour chart, well, very often market, due to the momentum, could show some continuation to the upside. So what we could do currently in current environment, if you are bearish and you see that hourly turned now bearish, this is something that looks like the head and shoulders. Okay, your major area to watch for is that area. If market will break it to the upside, then probably it could show some continuation. Maybe it will be the major continuation on the daily time frame to the 147 area. I don't know. Currently it's impossible to tell definitely. I just want to show you what levels to watch for. Do not be trapped in the wrong position. But you have advantage. If you entered right from that area that we have discussed yesterday, now you have the profitable position. Okay? So if market will take that area to the upside, then probably we'll see some acceleration further. If you are bullish and you think that market should continue to the upside, use this candle to enter on the long side of the market with the stops just below this swing. Because if market intends to continue move to the upside, it should not erase this strong upward candle on the hourly chart and should not take the C point. Your advantage here is that you could place the really tight stop. So if you will be right, your risk reward ratio will be nice. Okay, because market really could continue some further acceleration to the upside. Because another moment I just forgot to tell you on the daily time frame is that this area is area of completion of this pattern. So this is the area of target. 141, 141.50 is the target of this bearish engulfing pattern. As we discussed, this is the target, the length of the bars. So if you count the length of this bar to the downside, you will see precisely that area. So this could be really the great continuation of that ABCD right to that area, or this greater ABCD pattern. That's major problems for the bears, because this could be really start of something big on the daily time frame. Okay, so from that standpoint, if you are bullish, you do not want to risk much, because this could be just the further continuation to the downside due to pattern on the 4-hour time frame ABCD. Okay, so use just this resting swing to enter on the long side of the market with the stops, for instance, just before the C, below the C point.